Let's be real, if you're new to investing, opening a trading app for the first time can feel like sitting in the cockpit of a spaceship. There are charts everywhere, confusing terminology, and a paralyzing fear that one wrong tap could wipe out your savings. The good news is that the best trading apps for beginners are specifically designed to combat that exact feeling. They prioritize a clean, intuitive interface and educational tools to help you learn as you go. But with so many options, how do you possibly choose? You've got Robinhood, Webull, Fidelity, Charles Schwab, and so many others all vying for your attention. In this video, we're not just listing the most popular apps. We're going to break down the top 5 platforms for a true beginner, comparing them across the factors that actually matter when you're just starting out: simplicity, cost, learning resources, and the specific features that will help you build confidence. By then, you'll know exactly which app aligns with your personal financial goals and how to avoid the common pitfalls that trap new investors. The first app we have to talk about is the one that revolutionized the industry: Robinhood. Its core philosophy is ultimate simplicity. The interface is clean, minimalist, and designed to make buying and selling stocks, ETFs, and even cryptocurrencies feel as easy as ordering a pizza. There are no account minimums, and trading is commission-free. For a beginner who is intimidated by complexity and just wants to get their feet wet with a few dollars, Robinhood is a compelling starting point. However, this simplicity comes with trade-offs. The research and educational tools are relatively basic compared to other platforms. It's also been criticized for its gamified interface, with confetti animations and push notifications that can encourage impulsive trading rather than long-term investing. So, if your goal is pure, simple, no-frills execution, and you have the discipline to not get sucked into day trading, Robinhood is a solid option. But if you know you need deep research and educational content to make informed decisions, you might find it a bit lightweight. This brings us to Webull, which is often seen as the next step up for a beginner who quickly outgrows Robinhood's simplicity. Webull offers commission-free trading on stocks and ETFs, but it packs a powerful punch when it comes to tools. You get access to advanced charting, real-time market data, and a much deeper level of technical analysis. It's a fantastic platform if you're the type of person who wants to learn the analytical side of investing and you're not intimidated by a slightly more complex interface. Webull also offers extended hours trading and a very robust paper trading feature, allowing you to practice with virtual money before you risk the real thing. The downside is that this wealth of information can be overwhelming for day one. It's not as instantly intuitive as Robinhood. So, Webull is the perfect choice for a beginner who is a quick learner, genuinely curious about market analysis, and plans to graduate from a passive to a more active investor. Now, let's shift gears to the traditional powerhouses, Fidelity and Charles Schwab. These are full-service brokers that have built excellent mobile apps. They might not have the flashy, hyper-simple UI of Robinhood, but they make up for it with immense depth and security. The biggest advantage of starting with a platform like Fidelity or Schwab is that you can grow with it for your entire life. They offer everything from your basic brokerage account to retirement accounts like IRAs, credit cards, and even banking services. Their educational resources are top tier, with webinars, articles, and detailed fundamental research on companies that you just won't find on the newer apps. They also offer fractional shares for thousands of stocks, meaning you can invest in expensive companies like Amazon with just a few dollars. The interface might feel a bit more corporate at first, but it's well organized and designed for clarity over flash. If you're a beginner who is serious about long-term wealth building and you want a one-stop shop for your entire financial life, starting with Fidelity or Schwab is a phenomenal decision. Finally, we have to talk about an app that takes a completely different approach: Acorns. This is the ultimate set it and forget it app for the absolute beginner who doesn't want to think about picking stocks at all. Acorns works by rounding up your everyday purchases to the nearest dollar and automatically investing that spare change into a pre-built, diversified portfolio of ETFs. You link your debit or credit card, and the app does the rest in the background. It's passive, effortless, and teaches the powerful habit of consistent investing without requiring any financial knowledge. The downside is that you give up control. You're not choosing individual stocks. There's also a small monthly fee, which can eat into returns if your account balance is very low. Acorns is perfect for someone who finds the idea of researching stocks daunting and wants to build a nest egg automatically, starting with just their loose change. It's less of a trading app and more of an automated investing tool. So, how do you choose? It comes down to your personality and goals. Ask yourself this crucial question: do I want to learn how to actively pick stocks, or do I just want a simple, automated way to start investing? If you're in the first camp and want to learn, Webull, Fidelity, or Schwab will serve you better in the long run. If you're in the second camp and want a hands-off approach, Acorns is a great starting point. And if you just want the simplest possible interface to buy a few shares of companies you know, Robinhood is designed for you. Remember, you can always start with one app and open an account with another later. The most important step is to just start. As a final, critical point, all investing involves risk. The value of your investments will fluctuate, and you could lose money. This video is for educational purposes only and is not financial advice. Please do your own research and consider your risk tolerance before investing. If this breakdown helped you understand your options, please support the channel by liking this video and subscribing for more clear, unbiased guides. Now, I'm curious which of these apps sounds most appealing to you, and why. Let me know in the comments.